Good afternoon. Welcome to Midcap Radar. I'm Sonal Putra. With me is Vivek Iyer. Recovery and a sharp surge from the lows. That's the theme that we are tracking right now on Midcap Radar. Across the board, there is a shade of dark green. We'll keep tracking that for you, but a lot lined up on the show today.
Good afternoon. Not complaining at all. Sharp surge, especially the small cap index up over 1% now. But we have quite a lot lined up on the show. Let's start off with the top headlines. Market extends gains, Nifty Sensex at the day's high, mid-cap trade in line, utilities and industrials gain, while realty and pharma drag.
NTPC Green Energy lists at a small premium but charges up thereafter, delivering strong gains for investors on the IPO price of 108 rupees a share. The management tells CNBC-TV18 it is on track to meet its big capex targets.
Siemens India missed revenue estimate but delivers a strong bump up in margins and profit, surprising the street. The order book too sees strong growth. The stock climbs.
Ola Electric launches two scooters with variants priced between 39,999 and 64,999. These are the lowest priced models in its portfolio and perhaps the cheapest EV scooters in the industry.
ZF Commercial under pressure after 11 lakh shares of 5.7% of the total equity changes hands. This is worth nearly 1,400 crore at an average price of 12,679 rupees per share. The stock correct nearly 13% in trade.
Okay, those are the top headlines. We'll discuss some of these stocks in greater detail as well. For now, it's all about the markets, the benchmarks, the way they have moved in last couple of trading minutes. Slightly come off from the day's high as well. It was up 130 points. Now it's up around 118. Nothing much to complain there, but it's a very stock-specific market as well. We have big moves coming in a lot of these small caps and mid caps. So watch out for that one. And it'll be important to track the action before tomorrow's monthly expiry as well. A lot that is lined up. And then we'll have around 45 new F&O stocks in the new series. So it's a lot of action that we are going to see.
Lot of action that you're going to see. And very good point that you made, the kind of volatility that we are seeing going into the last series as far as the calendar year is concerned, and a whole host of stocks that will be added to the F&O segment. So that it too is something that we will have to keep an eye out on. But Hormaz is standing at a wall. This is a special segment, mid-cap movers. Hormaz looking at all the stocks in the mid-cap space that are moving around in the session.
It's been a while. We were craving for some news flow driven moves seen in specific stocks after a bit of a dull over the last couple of days, but there are plenty of movers within the broader markets, and we'll start off with the gainers today, as is the color of the screen. Aditya Birla Real Estate now at the highest point of the day, 7.5% higher, as is Vodafone Idea, one of the top gainers within the F&O space, and Bharat Dynamics moving in line with this very sharp comeback seen from the defense companies. Some of the other movers related to news flow driven moves, Zaggle is one of them. We spoke to the management earlier today, is locked in a 5% upper circuit. Sagility is in also an earnings reaction, 8.5% higher, and Aster DM, the highest point of the day, 7.5% higher there as well. A lot of brokerage commentary came in this morning for a lot of the names. Ola Electric, after the coverage initiation from Citi, has almost reached its price target as well of 90 rupees, 16.5% higher there. Prestige Estates after the downgrade, and NTPC after Jefferies gave a target of 500 on the stock, doing well for itself. Stocks that are doing well on the back of strong volumes in today's trading sessions. Quest Corp is one of them. Engineers India in line with the PSU theme, 6% higher on very strong volumes, along with KEI Industries and 361 WAM. And lastly, of course, why can't we not talk of railway stocks when everything else is moving higher? They are moving higher as well. Ircon, Titagarh, RITES, almost every other railway stock, including IRFC, trading with gains of almost 3 to 5%. Back to you guys.
Okay, all right. So those are some names moving around in the broader market. Thank you so much, Hormaz, for joining us as always. It's a good time to get a technical check on the market. Sudeep Shah from SBI Securities is joining us for just that. Sudeep, good afternoon. The surge that we've seen from the lows, the expectation was of a consolidation, but markets have surprised on the upside. What are the next levels to watch out for? Would this rally continue?
Good afternoon, Sonal. Yes, we feel that this rally would continue because there are 2-3 things here. That firstly, that the index has rebounded in the last 3 days from a key support levels. Now, post rebounding and moving, say, almost galloping 1,000 odd points in less than 2 sessions, Friday as well as Monday. The last 2 sessions we saw relatively a calm market. There was consolidation. But if you see the 24,050, 24,100 mark in the last 3 sessions have been guarded. kind of markets are taking support at that zone, and today from the lower levels with Reliance participating, as well as if you see today the kind of texture of the market, what kind of spaces have moved apart from the sharp reversal in Adani stocks, it's the capital goods space, power, defense. So it's all the high beta names which were the erstwhile participants of the rally. They have now started to participate once again. So that gives I guess that is giving more confidence, and that's why we feel that with this all-round participation into the markets, 24,200, 24,150 now would act as a strong support, and we expect this rally to continue up to 24,550, 24,600. That is where the real resistance will come. So yes, for the next 200-300 points, we might still see some consolidation, but it would be a stock-specific market from here on.
Good afternoon, Sudeep. Sudeep, what are your top picks for the day?
Good afternoon, Vivek. Vivek, the top picks, there are two stocks that are on my radar. One is from the defense space, that is BEL. Now, BEL has given a decent breakout today. The last 7-8 weeks, it was consolidating between 275 and 302, 303. But today's price action, as well as the open interest build-up in the counter, shows that the stock could still head higher up to 315, 320 levels. And this could be bought with a stop loss at 301. And the second stock that we like is InfoEdge. So InfoEdge, if you see, the stock has been in a decent uptrend. And if you see in the last several sessions, while the markets were in a downtrend, this stock was in a complete uptrend. So here we feel that this could be bought with a stop loss of 8,150 on the downside and the targets of 8,600, 8,800 on the upside. This is kind of a positional bet, but the stock looks good on all time frames.
Okay, all right. Thank you, Sudeep, for joining in today. So that is the update on the technical side of the market. So with that, we'll do one thing. We'll slip into a short break. Amit Kumar Sinha from Mahindra Lifespace Developers will join us next to discuss the latest projects and business outlook. Welcome back. You're still tuned into Mid-Cap Radar on CNBC-TV18. Well, the stock on our radar is Mahindra Lifespaces. The company's arm, Mahindra World City Developers, has announced second phase of its industrial parks project in Tamil Nadu. This is in partnership with Sumitomo Corporation, Japan. Amit Kumar Sinha, the Managing Director and CEO of Mahindra Lifespaces, is joining us now to take a few questions. Amit, good afternoon. Thank you so much for joining in. Can you give us a sense of what the shareholding will be in this phase? This is phase 2 of the project. What kind of investments will you be making in this? Because it is basis the equity shareholding that you have here.
Thanks for having me. So we already have a partnership with Sumitomo for phase 1 of our Origins Chennai Industrial Park. The shareholding currently is 60-40. For phase 2, this will continue to be the same stake. So we'll have 60%. Sumitomo Corporation will have 40%. And that's the deal that we have signed to expand from phase 1. We go to phase 2. So that's the shareholding. In terms of the investment, there are two kinds of investment. The first is the initial investment, as we are doing finishing the land acquisition. For that, we have earmarked 225 crores. It will be in the same ratio as our shareholding. And there will be significant additional investment that will happen during the development of the industrial park as we do the infrastructure, roads, STP, all the other relevant infrastructure that are required for any corporate MNCs to actually establish their industrial establishment into these parks. So that will be significant over the next few years. But the initial starting point is 225 crores.
Got that. Amit, give us a sense now. while you are developing this particular industrial park, do you already have tie-ups? What are the kind of rental agreements that you have in place with, are any of the existing clients also setting up shop over there? And can you give us a sense of what kind of annuity you can expect from this particular industrial park 2 that is being developed?
Yeah, so it's slightly different business. Let me just explain. These are not rental incomes. These are called lease income, but they're actually perpetual leases. So it's considered as a sale. So from that point of view, you don't have a annuity income. We have a small annuity income that comes through the O&M business. We maintain the parks, so that comes as the annuity income. But we have a very, very healthy pipeline. There's a Origins Chennai has attracted one of the largest set of investments from Japanese clients. Last year, Mitsubishi, for example, decided to put their largest factory in Origins Chennai, roughly $220 million investment along with the land investments. Similarly, we have a very healthy pipeline from Japanese and non-Japanese clients. And that's why the partnership with Sumitomo is extremely important for us. So that will get translated into lease revenue, which is a one-time, let's say, sale revenue. But the rental income that you refer to is actually the O&M revenue, which is based on a case-by-case basis, which is much smaller, but that allows us to collect that O&M or CAM charges in residential equivalent terms that comes to us on an annual basis.
So what is the number to that, Amit, these rentals or the O&M charges that we are talking about, or do you decide it before you let it out? And the second thing is the commercialization date. By when do you commercialize this phase 2 completely?
Yeah, so the approval process has started as we have concluded the land acquisitions. Obviously, this goes through 2 rounds of approval. First is the master layout, and then the specific to the client. So that process has started. It typically takes 6 to 9 months to get approvals, and in the same time, we're able to attract companies to come and do the due diligence on the land, what kind of construction they want to set up here. All those things happen concurrently. We have a very healthy pipeline. The commercial numbers are a little bit confidential at this time because each client is very different. The kind of land, the kind of support services they require. So we'll be able to share those as those deals conclude. But at this time, they are currently in the pipeline stage. But as we have done in the past, whenever a deal concludes, we share all the details.
Amit, we get that, and we take that point on board. Could you give us a sense? Typically we are understanding that different clients will have different requirements in terms of the square foot, for any kind of commercial establishment or in office spaces that they're putting up. So could you give us a sense of, how are land rates trending over there, which will help us go ahead and analyze the kind of income you would get. And number 2, you also have one large project, number 1 in Chennai itself, and also in Jaipur. So any extension or any expansion you're seeing over there?
Yeah. So let me just cover Chennai and the commercial point. I think you're right. The lands are typically sold on an acreage basis. So per a client will have 5, 10, 15, 20, sometimes even larger, like Mitsubishi was 50 acres plus, right? And the location and all those things, the pricing can go for anywhere from, let's say, 2 crores to 5 crores an acre. And this is net area, so not the gross area. So that's depending on the location, infrastructure, and all those things. So that's where and we publish that as part of our analyst report every quarter. So you have all the details there. Jaipur is an exciting location for us. That we have roughly 3,000 acres of land, 1,500 acres in SEZ, 1,000 in DTA, roughly 500 acres in the social. We are very heavily utilized on the domestic side. We have more opportunities for clients who are looking for SEZ space, but that location is very close to NCR, as you know. So it has a lot of exciting clients, exciting opportunities that we are offered to Japanese and any other clients. So Japan is a big part of our focus in Origins, but in Jaipur, it's any client that's interested in setting north as a frontier for their market consumption.
Okay. All right. Amit, your leasing revenues, they have more than trebled in the first half versus last year. With this project coming in as well, the O&M annuity that you're talking about, what is the outlook on the leasing business overall? What do you plan to end this year with? And with this project also getting commercialized, what will FY26 look like?
Yeah, so we have been very cautious about giving the exact guidance on these numbers. The reason is very simple. These are very lumpy deals. These are large deals which happen, and sometimes it's not exactly limited to the financial year that we report our results. But typically, the kind of locations we have, the kind of demand we have hovered around if you see the last year and this year, last 2 years, around 350 to 450 and 500 crores per year. It's typical industrial leasing revenue and O&M revenue combined together across all of our locations, which include Chennai, Origins, Jaipur, and a few other small locations. So all of them is a healthy business for us as part of our minor life spaces industrial business.
Amit, two-part question, one, just to get this out of the way. A lot of your peers have actually looked at monetizing, the commercial part of the business via REIT. Is that something you will look at? And number two, you've guided for close to 8,000 to 10,000 crore of booking guidance as far as FY28 is concerned. Will this largely be organic, also looking at inorganic growth? Any more land acquisitions, any more JVs that you're targeting?
Yeah, so I think there are two parts to that guidance. Let me answer the second part of your question. So 8 to 10,000 crore is primarily coming from residential. Let's take the midpoint, 9,000 crore. So our estimate is that 8,500 crores should be our residential pre-sales, and roughly 500 crores would be from the industrial side. And that's how the business we are building. You may have seen some of our recent announcements in the first half or in the last 7 months of this year, including the announcement of large JDA that we did in Bhandup. This is a very large, close to 3.5, 3.6 million plus almost 4 million square foot. That will be mixed use, residential, commercial, and retail. And we had done a few others in the early part of the year. So we are consistently growing our residential business while we are maximizing value creation from our industrial business. To your question about REITs, we are looking at ways to do, raise funds. REIT an example of it, but they are more relevant for commercial, where you have rental revenues, rental annuity coming in. But for residential, you are looking for platforms, some kind of QIP, preferential. All those are part of our options that we look for providing the capital for growth.
Okay, all right. Amit, thank you so much for joining in with all those details. The street likes what you're talking about. The stock is spiked to the day's high. We'll watch out for the execution and the outlook going forward on Mahindra Lifespace Developers. With that, we'll slip into a break. When we come back, we'll talk more about markets and stock-specific action on the other side. Stay tuned.
Welcome back to Mid-Cap Radar. Well, we started the show on a strong footing with all of the indices recovering very sharply. The Nifty at the day's highest point. The small cap index is the one that is clearly outperforming market breadth. Very strong small cap index up over 1.1% in the session today. But with that, it's all the time we have on this edition of Mid-Cap Radar. Your stocks when we return.